Okay, let's unpack this. We are diving into a piece of technology you probably use multiple times a day, the digital wallet.
Hmm.
But, we're not just talking about tapping your phone at the grocery store.
That's right. I mean, when most people hear digital wallet, they just think of a convenience feature, a nice to have.
Right.
But our sources really frame this as a central innovation in modern finance. It's this rapidly evolving category that is fundamentally reshaping how people store value, make payments, and how consumers, merchants, and banks all connect with each other.
And I think that's our mission for this deep dive, isn't it?
Yeah.
To see how this very basic concept, securely holding your payment info on your phone just transforms completely.
Completely. Based on the local economy, the infrastructure that's there, the regulations. It's a fascinating study in just adaptation.
So I have to start with the baseline,
Right.
the model we all know best,
Yeah.
the US and UK model, which is really about optimizing a system that already exists.
Absolutely. The US model, you can think of it as a card overlay. It's all built on top of existing, deeply embedded consumer behavior.
We love our credit cards.
Exactly. So Apple Pay, Google Pay, they're mostly about storing those card details and making them safer to use.
Mhm.
And the key there, the real magic, is tokenization.
I think we need to be clear about what that is because it's such a genius little piece of tech.
It really is. So instead of your actual 16-digit card number being sent over the internet or to the terminal,
Which feels so insecure when you think about it.
it is. Instead, the wallet generates a unique one-time use token, a kind of surrogate number for that single transaction.
Ah, okay.
So if a hacker steals that token, well, it's useless. It's a dead end. It doesn't link back to your actual bank account or card. It's just security layered on top of the Visa and MasterCard rails we've used for decades.
And then in the US, you also have this just massive volume of P2P transfers, the whole social payment thing with PayPal and Venmo.
It's an ecosystem really designed for speed and online convenience.
But the UK is a little different, right?
Huh.
It's not just about the cards.
A little different, yeah. They have massive contactless adoption, just like the US, but their ecosystem is starting to diversify. And the key driver for that is something called open banking.
Okay, so how does open banking actually change what a wallet is?
Well, it allows certain approved financial apps, including some wallets, to initiate payments directly from your bank account.
So it bypasses the card networks.
It bypasses them entirely. It's an account-to-account payment. The wallet suddenly becomes an interface for different types of payments, not just a container for your card details. It shows a much more mature system.
That sets the stage perfectly because the US and UK models, they're about incremental change, making the existing system better.
Mm-hmm.
But here's where it gets really interesting. We move from optimizing a legacy system to just bypassing it entirely.
Hmm.
Let's go to China.
The difference is, it's stark. In China, the digital wallet wasn't built on top of card infrastructure.
Right.
It was built to replace it. Alipay and WeChat Pay, they came up in a market where very few people had credit cards. So they didn't need to worry about integrating with Visa or MasterCard. They
Yeah.
just started from scratch.
And the tool they used, the QR code,
Oh.
is so simple, but just incredibly powerful.
Exactly. QR-based payments dominate everything. I mean, from the guys selling vegetables on the street to a luxury mall, it's all QR codes.
So how does that work? Are they just payment apps?
Oh, no. They operate as super apps. They link to your bank account directly, sure, but they integrate payments with literally everything else.
Like what?
Messaging, ordering food, booking a train ticket, investing your savings, even accessing government services.
Right.
The wallet becomes the operating system for your entire digital life.
That scale of integration is just, it's hard to wrap your head around. It sounds incredibly convenient.
It is.
But doesn't that create a massive dependency? I mean,
Yeah.
when one or two companies control your payments, your communication, your credit, what's the trade-off for the consumer?
That is the critical question. The trade-off for that seamless convenience is immense data centralization. These super apps capture a staggering amount of your data
And they use that to do what?
to cross-sell you everything else. They know what you buy, who you talk to, where you go. It makes the platform incredibly sticky. It's designed so you never have a reason to leave.
Wow. Okay, so we've gone from the card overlay in the US and UK to this total life integration in China. Let's shift to our third model, India, which is, it's different again. It's not about bypassing the system. It's about building a whole new public digital highway for everyone.
India is, I mean, it's often called a technological marvel for this reason. They took a national approach. So before the current system really took off, you had wallets like Paytm.
And those were stored value, right? You had to load money onto that.
Exactly, you had to top them up. But that whole model was completely disrupted by something called the Unified Payments Interface, or UPI.
UPI, this is the key.
It is the absolute key. UPI is a government-backed, real-time payment system. And the crucial insight here is that UPI is the rail. It's the infrastructure.
So what are Google Pay and Phone Pay then? Because they're huge in India.
They are now essentially just really nice user interfaces. They're apps that let you run transactions across that national UPI rail.
So the wallet concept itself has changed? It's not a place to store money anymore.
Not primarily. It's become a mobile interface to access real-time bank transfers. So when you use Google Pay in India, you're not using Google's network. You're using India's national rail. And Google just provides the smooth front-end experience.
That's fascinating. It democratizes the whole system.
It does. It lets all these different companies compete on service, and innovation like Paytm now integrates lending and wealth management, but it all flows through that single public infrastructure.
This brings up a really important question, though. What happens in markets where there isn't much infrastructure, and maybe even more importantly, where a huge part of the population doesn't even have a bank account?
And that takes us to our third really distinct model, the one you see across large parts of Africa where the digital wallet becomes the primary tool for financial inclusion. It does the job the banks couldn't.
So we're talking about the mobile money model.
Mhm.
M-Pesa in Kenya is the classic example everyone points to.
That's the one. And you have MTN Mobile Money in Ghana, EcoCash in Zimbabwe. This model worked because mobile phone penetration just exploded, way faster than bank branches could ever be built.
So how do they work without a bank?
These services let you store value, send money, pay for things, all using just your mobile phone number. You don't need a bank account. You use a network of human agents like corner store owners to cash in and cash out.
And it often works on basic phones, too, not just smartphones, using SMS and things like that.
That's the genius of it, the accessibility. It requires almost no new infrastructure. It effectively turns mobile airtime or electronic value into a form of currency. It completely bypasses the traditional banking system.
And the economic impact of that must be huge.
Tremendous. You're enabling millions of people who were totally excluded to now participate in the digital economy. It's just remarkable to see the same core idea, storing and moving digital value, being used to solve such different problems.
It really is. Convenience in London, hyper-efficiency in Beijing,
Yeah.
and, basic banking access in Nairobi.
And you even see this in Latin America. A platform like Mercado Pago, it adapted the wallet to fuel e-commerce growth in places like Brazil and Argentina.
And so if we pull back a bit, we've got these four big global strategies: the card overlay, the super app, the national interface, and the banking alternative. What's the tech that makes all these different models even possible?
Well, the foundations rely on a few key pillars. We've talked about tokenization, but biometric authentication is huge everywhere.
Fingerprints, Face ID.
Yep. It provides security, but in a really frictionless way. And then you have the interface. NFC or tap to pay is great, but it needs expensive terminals.
Which is where QR codes come in.
Which is exactly why QR technology is such a global force. A merchant just needs a printed piece of paper or screen. That low cost is why it spread like wildfire in China and why it's so critical for getting small shops online in emerging markets.
So the tech enables the model, but the business models themselves must be completely different too. I mean, how do they all make money?
They really are. They mirror the platform's function perfectly. So Apple and Google, they're acting as intermediaries. They make money by taking a tiny, tiny sliver of the interchange fee that the bank was already charging.
So they're just facilitators.
Exactly. They profit by making the existing system safer and easier. Contrast that with PayPal. PayPal runs its own network. It makes money from merchant fees, from cross-border charges, and now increasingly from offering its own lending products.
They're a full-stack payment provider.
Right. And then you have the super apps. Their payment fees are often tiny or even zero.
So where's the revenue?
The revenue comes from the sheer breadth of services. They monetize the customer through wealth management, through credit, through e-commerce commissions, and through targeted advertising using all that data they collect. They don't just process a transaction, they capture your entire lifetime value inside their ecosystem.
Looking ahead then, it seems like wallets are moving beyond just being about payments. They're
Yeah.
becoming something more.
Absolutely. The future is deep integration. Your wallet will hold your car keys, your health records, your ID, and financial services will be baked right in. Micro investments, installment plans at checkout, all of it. They're also becoming digital identity verifiers.
And what about this move toward multi-rail systems?
That's critical. As more countries build their own real-time payment systems, like India's UPI, the wallet of the future won't just offer you Apple Pay. It'll give you a choice right there in the interface. Pay with your card, pay directly from your bank, or maybe even pay with a central bank digital currency.
So that's really the key takeaway for you, listening to this. Digital wallets are not one thing. They are these incredibly adaptive tools that just reflect local needs. They simplify our daily lives, sure, but they're also becoming the main hub for our personal data and our finances.
And since they are moving so fast towards becoming these all-in-one personal finance platforms, let's leave you with a final thought to chew on.
Okay.
If the wallet is already absorbing payments, lending, and identity, what core service that we currently think of as being only from a traditional bank, something like asset custody or maybe even financial advice, what's the next big service that's going to be completely absorbed and managed directly through that wallet interface?
The lines are definitely blurring between a payment rail, an identity verifier, and a financial advisor. A lot to think about. Thank you for joining us for this deep dive.